Whoa, man, markets crashing before our very eyes. My name's D7 here at Grok Trade. I've been trading in the live markets over 25 years using technical analysis. Let's get after it. All right, well, I got some information to share with everybody. The Dow dropped over 600 points. At one point, we were down almost 1,000 points. You remember how important that is, that we've been talking about a 1,000-point down day in a single day for some time, and that we're down. At one point, it was down 2.4%. Nasdaq down 2.9%, almost 3%. The S&P 500 down 2.5%. Worst day that the S&P 500 has had since 2023, and it marked the first back-to-back loss of more than 1% since April. The sell-off was triggered by a batch of weaker than expected reports on the economy, including the disappointing manufacturing activity data and the miss on the July jobs report. Unemployment rate rose to 3.8%. The SOM rule had predicted last month that we were already in a recession. Now it is set in. And the number of jobs added was below expectations. The Fed's decision to raise interest rates by 15 basis points to 0.25% and its announcement of plans to taper its bond buying also contributed to the market decline. However, I need to give you guys some more information on this. We're looking at statistics today. Statistics show that we had tripled the chance of getting a 50 basis points decrease, 50 decrease coming in just here recently. We're looking at statistics showing that we could have 3 to 4 rate decreases this year alone. This happened overnight, guys. So the VIX spiked at one point over 60%. It got up almost to 30 today. Settle down. We're getting ready to look at some technical analysis here. The sell-off was not limited to the U.S. markets alone, but global markets also experienced a decline. Japan's Nikkei 225 plunged nearly 6%. It was actually down 6.1%, its biggest drop since the start of the pandemic. The sell-off was broad-based, all sectors. The market saw the declines. Tech stocks, which have been amongst the best performers this year, were particularly hit hard here recently. And the Magnificent Seven tech stocks, including Apple, saw significant declines today. Let's get into the markets as a whole. Here's the Spiders daily chart. Now, if you didn't watch my video that I did yesterday, go watch it. But I said down, 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 bear flag. Look for this to drop. I said this could go either direction, but the odds were we're going to see a drop. Wow, did we, on huge volume. The last 3 trading days on bigger volume than what the norm has been. And if you look at this, down, 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 hammer time. I'm going to be sharing at the end of the video how I'm playing this market right now. So that will be coming up soon. Diamonds, if you look at this, a huge drop, closing below a major trend line. This is huge, very, very, very bearish. Nasdaq Qs broke a major trend line, down, 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 very bearish. Russell 2000, huge drop. Look at the trajectory, huge drop. We doji out a major support, breaking 2 major area trend lines and finding our third trend line, a support level. Huge volume, big volume up here at the top. Capitulation, big M for murder. Do you guys see the M? Hit the like button. Doesn't cost you anything to hit the like button. Doesn't cost you anything to hit it. Financials, drop. See the drop, big drop. Huge volume, guys. That's a big volume print. We have the rising 50-day moving average acting as support at this moment. US dollar, if you look at this, huge drop on the US dollar. Down, down, down. Bear flag. Bam, or bear pullback, bam, to the downside. Gold, take a look at this. It's looking like a big M at this moment. Silver, down, 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 bear pullback. Be careful with this. VIX up 26%, but it almost got up to 30. Look at this. That's the fear. Got way up here, came back down. Huge print. Thing I want to share with you, but I'm going to go back here to this, the spiders. See this drop? I want you to look at the trajectory of the drop. That means a lot to me. The Q's, trajectory of the drop. That means a lot to me. Russell 2000, trajectory of the drop. That is very powerful. Big move down. Financials, big trajectory. Drop on huge volume. So I want to just get to it. Here's my point in saying everything that I want to share with you at this junction. I've been sharing with you video after video after video of this marketing weakening. And now I showed you a lot of both oscillator and centered oscillator, what's called bearish divergences across the board on all major time frames. All majors. I didn't take the time to do the weeklies or monthlies. I wanted to get this video out on a Friday night so you had this ready to go. Now, guys, we are now experiencing something. We have not had a 1,000 point down day yet. Will it come soon? Maybe. After a big drop like this, what should happen? After a 2-day drop like this, we should get a short-term bounce. Short-term bounce. I put on some short-term longs on Friday. So today, added some long positions to take advantage of this rally to the upside that we may or may not get. This is not a solicitation to buy or sell. Educational purposes only. Now listen, I think we're going to get a bounce at some point here. When we do, it's going to be an impressive bounce. It usually is. However, I don't think we're going to meet these highs again. There's a good chance the highs that we're seeing in the markets right now, or that we have just recently seen, are the highs for many, many months, if not years. That could be set in right now. Jury's out. I want to see blood in the streets. I want to see a major 1,000, 1,500 point down day in the Dow to say, okay, our high has been put in. We're having 2 back-to-back major sell-offs like we're seeing here on huge volume. Might equate to that 1,000 point down day I've been watching for and looking for. But the bottom line is we could be getting bearish and quickly. Bearish and quickly. The inverted bond yield inversion that we've been watching, we're going to be watching that really closely. As soon as that corrects itself, which it could be happening at any time, that will say the market's in a recession. So we're seeing all of this right now, and we like to be able to trade to the downside as effectively as we trade to the upside. And if you can't do that yet, here to help you. You know where to go to figure that out. We're here to help you. So there it is. Hit the like button. Doesn't cost you anything to do it. This will probably be the last video you'll ever see from me unless you subscribe, because you'll be alerted, and you can always unsubscribe later if you want to do that. So there you have it. Big news coming soon on some education, free education that we're going to be delivering. Oh, very excited about that. You will be too. We're using some state-of-the-art new technology to help make our students rock solid traders. So there it is. Take care. If you like it. Share the video if you care to. Catch you guys later. Bye. Guys, why are you still here? You just watched my video and now you're still lingering around. Might as well be with you now that I have your undivided attention. Listen, if you haven't done so yet, I highly recommend putting in a foundation of trading, your foundation of trading through a mentor. For learning to fly a plane, you wouldn't just go through ground school before you start flying in the friendly skies. What you would be doing, though, is going up first with your flight instructor. Same thing if you're going to learn to ride a bike, you better have somebody behind you helping you ride a bike. Surgery, you're not going to read a few books and do heart surgery. So every principle and with being guided by a mentor, let finances be this. If you are a trader, you rate you from amateurs to professionals. Mentoring will do that for you. Anyway.